Valero. Whoa, got my eye on Valero. I like that VLO, Valero Energy. You're playing a dangerous game, Bart, with all these energy stocks. Well, it's all pretty much dangerous. I could get in my car and that's dangerous. Valero Energy, they make a lot of dollar bills. So, 130.74. Let's go to Valero. Let's see what we can do with Valero. Hey, Valero. Why does that say 130.96? No, there it is. 130.75. We're going to buy 100 shares. 130.63. Let's just look at it real quick. Try to get 130.60. Okay, we bought 100 shares of Valero just now, and then let's look at the Wheel of Fortune. It's actually not the Wheel of Fortune, though, is it? No, it's not. And the reason it's not is I was just looking at Jackson Financial as well. So you know how I feel about them. If we go to VLO, they don't have a dividend coming up. In fact, I think they paid it earlier this month. Yeah, so they already paid it. Oh, no, they haven't paid it. So I'll be collecting $102 or $102, $1.02 a share on my previous 100 shares because I already have 100 shares of Valero. Now I will have 200. So we're only focused on the 100 that I just bought. But you see what my friends over at Seeking Alpha say. They're like, hey, man, you got to buy it. It looks good. So let's go back to Valero. Look at the trade. We bought it at, hey, it's still going down. We're losing money. We bought it at $130.63. And that is an investment of $13,063, right? 130.63. And you could get a better deal right now. But this is not investment advice, as you know. It is not at all. Now, interest rates up, concerns about the Fed continuing to tighten, continuing with their restrictive policy, which they will. The rates are going to continue to go up. And JP says they're going to hold them up for longer, right? So they're going to be higher for longer. So that gives a higher probability of a recession. And in a recession, people take less driving trips, less vacations where they're driving using their car. So maybe less gasoline and energy is consumed. I say, no, not so fast. No. What I've noticed is a lot of YOLOing after the pandemic. If you look at the amount of money that's being spent on hotels and flights and vacations, it is a lot. So we're banking on driving season, sending Valero up, and we're not going to need it to go up that much for this demonstration. Because we're only going to go out about 30 days, I think, into the first week of April just for this trade to see what we can do as far as dollar bills in our pocket. When? How about right now? So we just bought it at $130.63, and we want to trade it. So what we're going to do is we're going to trade a covered call. So we're going to sell a call. And I was looking at 132 as the strike price. I mean, we could sell it for Friday and collect $127 right now, plus the difference between what we paid and the 132. But I was looking at putting some real dollar bills in my pocket, going out 29 days, so basically a month, and looking at the 132, which would have us at $515 into our pocket in just under a month. Okay, so if we did that, if we sold that one contract, the covered call, which of course, again, it obligates us to, what kind of spread do we have? Can we get $5.20? I bet we can. I bet we can get $520. Let's try to do it. Right before our very eyes, let's try to fill that. Okay, so there's $526. Okay, $526 into our pocket on the Valero, and we would be selling it at 132. So if we get out the abacus, the difference between $132 minus what we paid, 130.63, that is a profit of $1.37 a share. So that's $137 bills, right? So $137 plus the 526 that we just collected right here. So plus 526, that's 663 potential profit, because this is actual profit. The 526 is in our pocket. The additional $137 of share appreciation between what we paid and what we will likely have these shares called away, that's still proposed. That's still potential. That's still possible. I think it will happen. If you look at VLO, it bounces around a lot, and it doesn't take much for that thing to bounce up $2, $3, $5, and especially within a 29-day period. Now it could plummet. It could plummet down to $100, and basically I have, instead of catching a falling goose, preferably golden, we would catch a diaper, unfortunately dirty, would be in a trade where this thing went downtown to Chinatown, all the way down to like $100 between now and this date. But we would still have the asset, right? So the asset wouldn't change. We'd still have these 100 shares that would still pay us quarterly dividends that we can still trade covered calls on. So we'll keep detailed notes on all of these trades so that we see what are the actual numbers, Bart. Enough of your hypotheticals. What are the actual numbers? So let's look at continued hypothetical based on this trade, based on the covered call we just sold, based on it going up and through $132 strike price and having those shares sold, called away. We'd have $663, and we would divide that divided by what we just invested, which was $13,063. So that would be a 5% return for 1 month. And even with my math skills, I can determine that 5 times 12 is 60. So that would be a 60% return potential if it was annualized, right? If we multiplied this number by 12, we'd have 60. Don't you dare laugh. It's not funny. This is serious. Money is serious. It really isn't. It's just, a way to get your freedom. And you know how I want to be? How's that? I want to be so free that my very existence is considered an act of rebellion. So there we go. 60% potential on the board with Valero Energy. What do our friends over here? You know how our friends feel about Devon Energy. They think it's undervalued by 49%. Well, what do they think about the V and the L and the O, VLO, Valero? Let's see in real time what they think. Drum roll, please. They feel that it, okay. Hello. Well, then why would you agree to sell it for $132 a share? Because this is hypothetical. This is super hypothetical that it's undervalued by 52% with an intrinsic value of $276 a share. It could easily do that. But again, we do not suffer right here on the Wealth Snowball. We do not suffer from FOMO. There's no fear of missing out. We have LOMO. We love to miss out. And what we love to miss out on is the prescription for life that regular people live by, right? Paycheck to paycheck, debt to the eyeballs, YOLO into a Rolex watch that you have to finance and make big payments on, drive around in your leased Mercedes. Look at me. I'm rich. You're not. You're not rich at all. In fact, you're paycheck to paycheck and you suffer from a regular life. That's some soapbox talk right there. Cut it out. You're upsetting me. Yeah, I apologize, but you get it. You know what I mean. Part of my path to freedom is based on no debt, cash flow, right? Cash flow is king, cash is queen, and debt is the joker. That is part of the freedom plan, and the ability to basically do what you want when you want with whomever you want. That is the ultimate freedom. And in this country and basically in this world, to do that, you need more money coming in than is going out. So we're trying to do that right now. Thanks for joining me on the Valero trade. What's it doing right now? It is up 2 cents from where we bought it. Quick look at the SPY. SPY is at 397.12. So we are sitting pretty. You can see it's got some real red action going on through here. Bloop, bloop, bloop. Look out below. So we are in great shape on our, let's go to that trade, on our credit spread trade. It was a call credit spread, and it's basically saying we're 91% in profit. We've got this AbbVie call, expires Friday. We're 90% in profit. Remember the dish? We were trying to catch a falling knife there, but we wanted it to be a falling goose, preferably golden. Looks like that's what it is, a golden goose, 90% profit there. These calls, they show that it's 43% in the negative, but the reality is we'll still make money. And in fact, we might roll them out if it's under 95, because we could still roll it out if we wanted. I bet we can roll it out right now. Make some dollar bills. Let's just look if we rolled this position, because right now Google's at 95.23. So for sure, if it keeps that trajectory by Friday, these $95 calls, of course, will be that contract will be assigned, and I will be minus 200 shares of Google. But I'll get the cash. I'll get the $19,000 coming back to me. But who wouldn't take them away from me if they can take them away essentially at a discount? But we could roll that position, even though there's a high number to get out of this trade right now. If I wanted to just close it, I'd have to pay $1.17 per share per contract. So, you're looking at $232 bills just to get out of the trade. But we could roll it and see if we can't roll it into some more money, right? But we'd have to cover this. Okay, so this is the debit. It's $1.15 at this very minute. So we'd have to collect more. We could roll out and up, which would be to $96, which would make it even more profitable, our position, and also collect $168 for doing so, which is a total of 51-cent credit times 2 is $102. So let's see if we can't get that filled and put that money into our pocket and roll that out to a better position of the Googler, because then we'll still have our $200. We'll lock in another $200 of potential profit by rolling out and up to a higher strike price, right? So it's not filled. We can replace it so that we can do it live. If Google, let's see what we do. There we go. You don't have any positions to roll because that means it was filled. So we put those dollars. Where did we put them? We put them in our pocket, and we protected our position on the asset. So we still have the 200. It still shows it pending, but as you saw, it was filled. And how much did we put in our pocket? $102. Pay attention. $102 into our pocket, rolled to a higher strike price. Okay, so now if those shares are called away next Friday, it will be for another $100 per contract. So that's an extra $200, right, in our pocket, plus the $102 premium. So that is another cash flow readjusting of this position, right? So we are adjusting this to put more dollar bills in our pocket. And, there's no saying that Google isn't going to go down between now and Friday, and they never would have been called away in the first place. So it is what it is. We can make moves how we want, because why? Because we're so free. We're so very free that our very existence is considered an act of rebellion when you compare it to others. Still, it's still showing that it's here, but it isn't. What are you even talking about? Well, my experience with Robinhood is it'll take a minute for that to show up at a 317.96 call. This Intel, I really don't want to own any more Intel. I got a bunch of it, and it's been a dirty dog for me since I've owned it. I collect a nice dividend with it, but its share price, its value for me is a dog, dirty dog. Let's go to the stock itself. I don't even know. Why is it not calculating my numbers? Oh, well. I know this. I know that I'm down on the Intel. I'm down by several $1,000s on that position. I don't want to own any more. Doesn't look like I'm going to. Between now and Friday, I'm 85% in profit on that trade. And I don't want to be put that. When I did make that trade, I was like, I'll take 200 more shares at 24.50, and I've changed my mind. So I'm not gonna buy to close that right now unless it turns on me the next couple of days. Right now, I'm just gonna let it expire at full profit on the trajectory that it's on now. So there we have it. Another little action for us on the Valero. Hopefully capture some dollar bills and keep the fun and profit going forward. Talk to you soon. Subscribe, like, comment, share with a lovable friend. See you in the next video.